Hello, guys. Good evening and happy Valentine's Day. It's again a pleasure to be with you here, and I'm really excited to again be with you guys. It's an honor. So, there's one thing I want to share with you because I just heard a very good news, and I guess you guys were waiting for it. You guys need to hear this. So, I'm gonna say to you before that we jump in into the session. So, within next 15 days, we will be facing the first uh, customer service office in Middle East, and this customer service office for FX1 will be open soon for training matters and for compliance and for meeting matters. So people will be invited to this office. This is very important to us. This is a very, very important notice. I just wanted to share it with you guys, and we're gonna start the meeting within next 3 minutes. Thank you so much, and we'll be back soon. All right, guys, let's start. I hope you're having a great evening. It's an honor again to be with you guys wherever you are, and whatever your time zone it is. Is it morning or it's evening? I'm really happy to be with you guys in here. We have two traders with us tonight, and they're gonna tell us a bit more about how to analyze these traders, and we're gonna see which portfolios are good. We're gonna analyze a bit more. We're gonna jump more into details, and we're gonna see how to follow these traders, how to go on with these traders, because that is actually what is really important to all of us. But first things first. So when you go to CopyP, when you start to go with this website or with this platform, you will see a lot of traders on top rank or into the strategies menu. So there are few items into these columns, and each of them give you a different kind of meaning or a different kind of risk taking. So you will see which one is good for you to go on with or basically follow. This is very important that you look for some trader which fits your mentality, because there are a lot of traders into this list and there are a lot of people on this list. So you don't need all of them. You might need a few of them. So we have three different kind of ranking into this strategies, and there are 8 items which has been included for you to understand these trader. So some of these traders are top growth, which they categorized into top growth category. And we have Fullerton Markets traders, and we have traders from Fx1 Market, which comes to our traders, and we have top ranks, which are actually the best traders based on the computer AI analysis. But before we jump into analyzing, let me tell you a bit of briefing about what is these columns. So we have 8 different columns, and each of them will give you a different perspective, will give you a different meaning. So age means how long a trader has been working or has been working on this platform. Growth is actually how much they made since day one, and average per month is how much they are making per month. That's actually very average. It's not about 1 month. That the total PIP, as you know, is basically PIP is the unit of measurement into Forex market. So every movement is actually based on pips. How much that trader lost on a trade, so 69% is for the first trader on this list now, and how long it took that this trader basically recovered that amount of loss. Recommended minimum, this is actually the amount that the system is providing to you, and the amount of profitability, which means how much of its trades were positive. There is one thing which is very important. I need to mention that. I've been mentioning it every time and every session, and is about this ranking. So if a trader is on rank number 1, it's not necessarily showing you that this trader is the best trader for you, or being at the end of this list doesn't really necessarily makes it a bad trader. This is basically based on you and your mentality. If you want a trader which goes with a high risk, that's your call. If your amount of initial or investment is small, that's basically very different on how you're going to choose a trader or how you're going to go on with a trader. That's very important. One thing I need to mention to you guys is you should not necessarily use one trader as your portfolio. You need to create a basket. You need to create a basket of different traders. As you know, maybe sometimes one of these traders made a loss on a month and the other trader is actually covering for that trader. That's the best and the safest way. But also having too many traders on your portfolio, or having like more than 2-3 traders, it will create a negative impact on your account. So for example, if you have $10,000 in your account, it's not necessarily need to be with 20 or 10 traders. This will basically create a chaos for you. So what we are suggesting is the best way is to go on with few traders. Depends if your initial is between $1,000 to $2,000, use 1 or 2 traders. If it's up to $10,000, 5 to 10K. Maximum 3 traders would be considerable. 20 to 50, 4 traders will be good. More than that is not recommended, and it won't create a good return for you. So what you can do, you can basically click on these small positives, and you can basically have them into your favorite list, and you can analyze traders into your favorite list and then see which one suits you best and which one is the best trader to follow, and you go on with those traders. So tonight we have chosen few traders before, and I have already have these pages loaded in here, and we can go on. So we have my other friend here tonight with us, and we can hear what his ideas. So this trader, he has made 137% equity growth, an average of 3% per month. He lost 54% on a drawdown. System believes it's a normal risk taker, and $1,500 is the recommended minimum. The account is live. It means he's using he's using real money, not a demo account, and it's all using automated trading method. And it's working all trading hours, like Asia, Europe, and America. But if you have a look on the results of this trader every month, you will see different numbers, but never negative. So he ended all his month without any negative impact. This shows that he's using a good system. He's using a great like 2 to 10% per month, and he's been doing it very good. Something which is really important, and I need to mention that I already mentioned it in last webinars as well. You need to have a look on their yearly income. So more than 60 to 70% a year. These are good traders. So more than 120% a year. These are very professional traders. So as you can see this portfolio and the results that he has got, till today, everything was good and everything was positive. I like to hear my friend's idea. Let's see how he thinks, or what's his idea as well, because then we continue. Okay, hi everybody, and thank you so much. I've heard whatever you said, and it was totally right. And I need to mention that choosing a trader and analyzing a trader is very important. And as you said, this trader is a normal trader, and he has been following a very good system, a very positive and very normal system. So we should not look at the monthly basis. We should look at the yearly basis as well. But we need to keep an eye on monthly basis as well. So one thing I need to mention to you guys, all of you guys, they have been asking me this question. For investment, you have 4 steps. First step is, which is very important, is to doing research. This is exactly what we are doing. So researching is #1 priority. #2 is adding to your own portfolio. #3 is to keep an eye on it, and #4 is when to come out. So in every kind of investment, this is actually the path. We choose traders based on their mentality, based on how much risk we want to take or how much we have as initial, which is very important. And when we analyze these things and we chose a trader, we keep an eye on it. But what does it mean to have an eye on the trader? This will have a definition when I create a principle for myself. How much do I really want to make in this market, or how much loss am I gonna risk? Or this is basically what you can do or what you can think about when you're talking about a trader. So if you're adding a trader into your portfolio, you need to create a principle for yourself and choose that trader based on that principle, and basically unfollow that trader if it didn't fit your requirements. So this is actually a pretty normal trader. You can analyze it more. He didn't have a max drawdown, 3% positive month, and no negative month. There might be negative trades into that each specific month, but we only calculate based on yearly return. So we need to make sure that if this guy is what I'm looking for or not. Okay, thank you so much. Thanks for sharing. Let's continue. So as you can see, these are more details into specifications, and 1 year and 4 months he has been working, 1,520 trades, 67% of the trades are positive, and he has average trades of 3 per day, and he had 26 max open trade per day. Most of his trades are short position, which means downtrend. The best trade made him 15%, and the worst has made a loss of 3%. Normally, these are the pairs that he is trading: USD versus Canadian dollars, Euro, Britain pound. So he uses all of these pairs. So most of the traders are only working on, for example, Euro USD, but this trader is basically using other pairs. So let's have a look on his trading statement. Normally, all his trades are, most of the trades are very small, so 0.016, very small trading size, so he doesn't actually go on trades on a big trade size. So as you can see, he doesn't use the same trade size, and which is good. It means that he's managing his own trades and he's managing all his trades. So as you can see, on 13th of February, he opened 3 trades, and 2 of them were positive. So he has trades open from 3rd of February, and he closed it on 12th of February, 9 trades in a day. And till 2 weeks ago, till today, he had opened 9 to 10 positions. But what is very important to analyze into a trader, you see on the column pips, which is very important, you need to see how much a trade went to negative side or how much it went to the positive side. So a trade that it never went to high and it went minus 50 pips, and it closed in minus 2 pips. This pip this trade went down to 79 pips and he closed it on 32 pips negative. So this guy went down to 146 pips and so this trader, all of by a look of on this, we understand that the trader is giving a lot of space to his trades. I personally don't like this kind of trades because it has a very long position and it has a huge timeline, which I do not recommend that. So if you want to compare his long positions, it means 2 weeks, 1 week. So his short positions are like a day or 2 days, which it goes into lots of negative, and I do not recommend that. There are much better traders. But if you want to work with this trader, if you want to let this trader to work for you, you need to create a stop loss. You need to put a stop loss on each trade that in order to make no losses on this. Okay, let's hear about my friend and the other trader, what he thinks. So what I saw in here are the numbers of trades that he opens. So if you have another trader and you have like 2 traders in your portfolio, this will stop the other trader from working. So this trader is giving a huge way into to his trades, and these minus trades are basically not good for us into our portfolio. So we never know when it's uptrend or downtrend. We never know when it's gonna be back, when it's gonna return or recover. So that is why I also suggest there has to be definitely a stop loss, and we have to give it a bit of limitation to this trader, because most of his trades, there are no specific space into his trades, and I do not recommend that. Guess if the market is not doing well with what you're doing, or is not doing well with anything that you're going through. All right, guys. So I like to hear about how to basically put numbers in one trader. This is actually what we never gone through. We would like to hear about this trader. If we want to choose this trader, and if we want to go on with this trader, how do we add him into our portfolio? So the first thing is, there are four different ways that you can you will be facing: automatic adjustment, percentage, fixed trade size, or proportional trade size. So each of these are different and will give you a different portfolio and a different setting. So if you go on an automatic setting adjustment, when you click on this, anything you have, anything as initial you have, totally will go to this trader. And for example, if you have, let's say $50,000, if this trader, is actually working on $2,500 on each trade, and because your initial is 20 times bigger than this, So automatically each trade that you will be 20 times bigger than each trade that he is having. So anytime you want to use leverage, because your money is 20 times bigger, every trade will be 20 times bigger in leverage as well. But the best option we found in here is percentage of the total balance. Basically, what you can do, you can give a bit of, you can give a percentage to this trader. For example, this account is $25,000. Let's say if you want to give 10% of our own initial to this trader, it will be something near $2,500, which the average trade size is 0.02. So if you want to go, normally the best average trade size is 0.02. You don't need to open minimum lot. You don't need to choose anything, because if you want to change it to something lower than that, making it 0.01, this trader is actually basically normal, but to me is a low risk trader. So if you want to make it a lower size, then for you will be less income. You can change the maximum lot, and that's pretty much up to you. You can make it 2 times bigger or even 3 times bigger. That's up to you. That's how much risk you want to take. So if your minimum lot is 0.02, you can make it 0.06 for 3 times bigger than that as your maximum lot. And this is totally up to you and how much risk you want to take. So other options, so the best is making it double. Bigger than that is not recommended and is not advisable. So that's the biggest that you will allow a trader to use as an average trade size. Next thing is fixed stop loss. As you can see, he doesn't manage his trades very well, and he closes his trades with a high level of negative return. So the best thing is to create a stop loss based on his trades. So normally you need to have a look on the positive trades as well. So for example, this trade went minus 30 pips. 20 pips positive went down to 18 negative. 33 pips went minus 3 pips. 46 positive, it went down to minus 11. So the best thing for this trader is for us to not go through, for us to not make any loss, is create something minus 50 pips. That's actually the best number I can actually give to you. So these trades, all of them, these negatives, will stop at minus 50 pips. It means you won't continue on the loss with the same trader. For some traders, you don't need to put any stop loss, but this trader needs that stop loss. But never go on fixed trade profit, because the trader knows where is the exact point to stop a trade and make the best profit into that trade. So trust to the trader on that point. They know what to do. The next point is forced exit and stop. This option is tells you how much of your money you want to risk or you want to give to this guy as making a loss. And if he reaches to that point, everything will be automatically stopped. And the trader will be unfollowed and there will be no more trades into this area. So for example, when you choose such a trader and you give him $2,500, what I suggest is to give him a permission of 20 to 30% of your initial. So 20% lower than $2,500 is about $500. So you're giving this guy $2,500. You can tell the setting to when my initial became $2,000 and he lost $500, I don't want to continue with him anymore. So automatically this trader will be unfollowed. The next one is worst deviation, which worst deviation means, for example, when the trader opens his trade and you're following him, and because of there will be, in a network, there will be some lag, some, I don't know, some delay. And if you copy this guy, if you copy this trader, there might be a difference of opening that order. So normally, I do not recommend this because this won't be a very logical option to go on with. The next three options, the first one says, do you want to open the trades which are, he is having it online, do you want to use those trades on the same spot? I don't think that's a good idea. Maybe the trader want to close that trades on that spot or on that time, and that would be a loss to you. The next one is you will limit the guy on his daily trades. So you can tell the system to not follow by any trades that this trader opens. So when you put 5 as an example, it means if there are 5 open trades, no more trades will be open for you. Until those 5 orders are done, and then you can have more trades. So I guess this is not a good option for this trader. And the inverse trading is never ever recommended. It says whatever trade this trader opens, open a trade for me in the other side. Do not work with this. Because this will be a negative income for you. So let me hear what my friend in here thinks about, or what he suggests as well into this part. So regarding setting or adjustment of this trader, and there's something which is very important before that you go into choosing a trader. The first thing is you need to know how much you wanna risk with this guy. So this is step number 1. choose what is the minimum that the maximum that you're gonna think as a loss. Why am I telling you that? It is because if I am going into into this deal and I want to risk that much, my stop loss will be different. So as a standard, this trader had a differences of 50, 60 pips on a loss, and that was actually the best number. But if I want to change these lot sizes, and if I want to make it more than the standard, my stop loss should be different as well. And if I don't change my stop loss, my initial should be different. For example, I need to give it a different percentage of my money. It means, for example, if I'm giving him $2,500 and my lot size is 0.01, so I'm giving him 5,000 pip as a loss. So you need to make sure that you know if you're going by 10 times bigger than the guy, 10 times bigger than the trader. So you need to give the trader a bigger stop loss, a bigger forced exit and stop. So worst deviation, I'm not recommending as well. And if you want to change the lot size and you want to go on with a bigger lot size, make sure that you give him a normal trade maximum trade, because when you are making it a bigger trade size and giving a bigger lot size for each trade, is very important that uh, you, you basically put that in your adjustment of maximum open trades. All right, so thank you very much for your ideas, and I totally agree with you. These options that we are feeling would be different for each trader. I remember we were speaking about another trader, and he wouldn't close his trades on the best spot. So on that trader, we also put fixed take profit, because he didn't know where to stop his trades. So he's right. It's very important. These settings are very important for each trader, for how much your initial is, for how much he is offering, or how much is the platforms offering. There's one more thing I need to mention, which is very important. When you set your own portfolio, so what you're gonna see in here, it doesn't mean that you need to go and use this portfolio. We actually use these portfolios because we wanna try and see what these traders are doing and how they're doing it. So this doesn't mean that these traders are the best. So on portfolio menu, you will see how much money you're giving to a trader, or how many percent of your initial is with a trader, and you can basically adjust the traders. So as you can see in here, each trader is having a different percentage of your initial. Those percentage that you have chosen that are basically based on $25,000, but in here, each percentage is about $27,600. So it's basically about what we have as our initial investment. So currently we are setting for 1.08 times higher than what we have on the platform. Something which is really important is till 1.4 times, which means 140% of your money, if you give to traders, are fine. This is basically very normal. This is nothing risky. What does it mean? So for example, my first 3 traders, I'll give 60% to Polaris trade, to profit trading. I give 40% to the first one. I'll give 40%. So this is basically 140% equivalent of my money. If I have $10,000, I'm modifying based on 140% of my own initial. So these percentage can be different either based on a percentage or based on lot size. And if you change these information, everything will be different. So if you're giving 10% to a trader and it says 0.01, if you change it to 0.02%, you are exactly giving 20% to this trader. So that doesn't mean that if you have 10 under, it will be 10% of your initial to this guy. And as you can see, 0.01 lot size, you make it double, everything will be double, every trade will be double. So all the options are basically in here, and it's very important that you follow them. So if you want to go on a medium risk taking, you can go up to 140% of your initial. And if you want to go higher than that, and you want to risk everything maximum, you can go in with 200%, which is a bit huge. But more than 200%, we do not recommend, and is very, very risky. Because if you put those risks into too much, as you can see, the margin into trade, if we make it double, this would be 40% for now. And into the previous webinar, I told you it's okay until 50%. But if it goes to 4 times bigger, this margin would be 100%, and there will be no trades to be continued for you. And some of your negative trades automatically will be closed, and that will be a loss for you. So that is why we're telling you that it's very important to make sure that you do money management, you make sure that you go everything properly, because we have 21 trades which are all negative, but still your equity, your balance is in safe side, and you can continue and wait to for those trades to finish in positive. Something which is very important and people are afraid of it is this negative number that you see in here when the trades are open. Most of the traders that we see in CoPPP website are the traders which are long-term. They have their trades on a more than 2 days trades. We have traders, they have their trades into a month. So it's very normal that a trade goes to negative side, because if it goes into the positive side and it goes fast, he doesn't need to make a trade open for a day or 2 days. So that's why you might see your open trades into negative. Don't lose yourself. Don't be worried. Those traders, I'm sure, were good, and that's why you chose them. Give them time. Let them close their trades and let them manage those trades based on their ideas. Do not touch these trades. Uh, Never cancel a trade. You can just click on cancel a trade and it will be discontinued, but never do that. As you can see, this trade is positive. I just clicked on it and closed it, and it was closed. Maybe this trade closes with double return or double positive of what we were having right now. So please uh, do not touch these trades. Do not close any trade, and let the trader do his own job. So all you need to do is to choose those numbers that your used margin won't go bigger than 50% and your risk taking level is controlled and not over two times bigger. Let's hear about our other traders' idea. Definitely, I totally agree with everything that you said, but there are a few things I need to mention. As you mentioned, we don't need to be worried. Managing risk and managing our own return is very important. And if you want to go so those principles that I told you is very important. So force exit and stop is very important. Everything that we said, like for example, being normal or being high risk taker is very important. You make it bigger, or you might be making it like on a bigger risk taking and taking a bigger lot size, but uh, I'm sure that would be a wise choice. But closing trades is not necessarily recommended. Is what we are talking about total always is about your equity and margin, used margin. So it's very important that if your lot size is getting bigger, your number of trade is very important. And if you have other traders I mean, into your portfolio, then they can't have open trades. So I'm totally agreed with whatever you said. The best thing is you keep your risk level in a lower side, and the most important element into this market is patience, patience, and patience. Thank you so much. I'm really agreeing with the last sentence. I totally agree with everything, but the last thing you said is the most important thing. Patience is very important into this market, and is the most important thing about a trader. So, because most of the people that come into this market, because of not having patience, they lose their initial, they use their money. So just as an example about what we were talking about, you choose a trader and you see from your $2,500, you're losing $1,800. And what if this loss will be more than that? So you close all these negative trades, and 3-4 days later, you'll see, for example, another portfolio from your friends, and they had the same portfolio and they make a profit of $1,000 on the same portfolio. Is because you didn't wait and you didn't lose $1,800. You lost $2,800 because you didn't also profit from those trades. So if you put your trust onto a trader, and if you're relying on a trader, make sure that you give the trader a time zone of, let's say, a timeline of a month or 2 months. These traders, they're trading for themselves as well. So they need to manage everything because they're making money on this. It's very important. But if you want to make sure that everything, if you want to change these, if you want to cancel these, if you want to cancel a negative trade, this will be your loss. But last thing I want to mention is about this used margin. What if this used margin is too much? You need to go on your portfolio or in your trading terminal. You need to see which one of these traders are for which trader. So for example, the strategies will show all the traders. So Polaris trade, for example, Polaris trade has 10 of open trades. As you can see, when you click on a trader, you will see how many open trades they have. So what you can do is you can go back to your portfolio, either give him a lower money, lower initial, lower percentage, or you can limit the trader, which I suggest that. You can pause the trader until these trades are closed and there will be no other trades open for you. So please do not delete anything in any circumstance. If you click on delete, they're active, there will be a notification of this much of non-trades, and these trades are minus for you at the moment. Do you want to delete this trader? If you click on close trade, you will be closed on those 9 trades and you will be minus $482. So that's why I'm telling you, do not do that and do not go into that area. Just pause that trader and there will be no more trading added to this trade from this trader. And until all his trades are closed, you can again resume with this guy. So if you pause a trader, there will be no issue if you don't delete the trader, because since you pause it, there will be no more trades opened from that trader. Best thing is you don't delete a trader from this list, and anytime you can modify them. You can make your risk higher or lower. You can come up with a different percentage, and you can manage this trader. So traders like Polaris Trade, like Best Trade, these are 2 traders which everybody are talking about. And most of their trades are about buy, are not about lose. So for example, this guy has an open trades of 9 trades, and for example, if you give them less average size, normally this will create a negative impact for you, or this will actually create a loss for you. So these traders basically using a trade type, it's called hedge. So every time that goes a trade to negative, they open another trade. So never change these trades average size. Never make it less, because if you want to don't make any trade on this trader, just click on pause. That would be the best. Okay, guys. Thank you so much for tonight. It was a pleasure to be with you. Every week, we will try to give you different ideas and different perspective of this market. So I hope that everything is new for you guys, and we try to go into the platform and make sure that you understand everything about this platform and how to use it. So I hope you guys know what you're doing about what is going on, and I hope your life and your money is always like this uptrend green line. Hope you guys having a great time, and thank you very much. Until next week, bye. Have a good night.